Hello and welcome to today's episode of Pivot to Profit, where we help entrepreneurs and founders keep more of their hard-earned money. I'm your host, Pam Jordan, and joined with me is the amazing tax expert, Alexis Sidney.
Hey everyone, how's it going?
Awesome. Well, today's topic is sales and use tax, which is super confusing and complicated. So we are here for the party, friends. But before we dive in, if you're a business owner and you need help understanding your numbers, you look at a P&L and balance sheet and you're like, but where'd my money go? And you look at the bank account and it just doesn't all add up. We would love to help you at Pivot Business Group. Just go to pamjordan.com to get connected with Alexis and I's team so that they can help you out. Sales and use tax. Why is it such a pain and so complicated?
I don't know. I think some business owners think it's free money for them. But the state has to collect some revenue some way, somehow. So they do that through sales and use tax. So, whenever you're selling certain products or food items, you have to apply with the law of that particular state and county so that you can make sure you're collecting the right amount. But they have to have a way to get some revenue. So they do that through your sales.
Okay, so I'm going to start with a basic definition and then you fill in any gaps. Are we cool?
Oh,
All right, so sales and use tax is a state level applied tax. This is not a federal tax. This is the state. So this is also the state that you live in. And if you ship or take products across state lines, it can also affect the state that you are selling in. So while Alexis sits in the great state of Georgia, I sit in the great state of North Carolina. And there are different rules for each one. So please understand that while sales tax is charged as part of the sale for taxable items, use tax is owned when a business purchases a taxable item. So there's two levels here. So there's sales tax and use tax. And this is all state related. It's where you sit as your business, but also where your customer sits. And what's so complicated is each state has different rules for this. And whether you have a product or a service, whether the item that you do is temporary, like if you do a home repair versus you put in new cabinets where it's considered permanent, it is the Wild West when it comes to sales tax. So, Alexis, give us an overview, give us some more details beyond the definition.
yeah. So definitely, like Pam mentioned, each state is different. So it's no cookie cutter approach, no one shoe fits all. So honestly, when we work with clients or we're having this conversation about sales and use tax, it's definitely important that you connect with the right individuals because you need to understand like what services you have or what products you have, how you're purchasing them, how they're getting to the customers so that you understand what you need to collect sales tax on and what you don't. And horror story, I've seen where, people try to do this on their own and they have either over collected and they have submitted way too much money to the state and they are due a huge refund that takes years to get back. Or we just see people flat out not they're collecting the sales tax, but not remitting it. And then that's a whole nightmare where you get audited, penalized. They can possibly like seize your business in a matter of days if a demand to get the sales tax. So it can go good or bad for you, but definitely you want to understand your business and how sales and use tax applies so that you can be in compliance. With this process, also, there are reports that need to be filed, tax returns. How about that? Not reports, tax returns. And this is different than, the regular IRS and the regular state income tax returns. A whole nother game here where depending on the volume of the products or sales, you may have to do a monthly report or a quarterly or an annual report. So just keep that in mind. There's a whole nother tax return that needs to be filed. But the beauty of it is we are so advance with technology these days, if you have the right systems and things set up properly, it can be easy breezy. It can be an automated process. You can use third party softwares that can help you navigate and track this stuff for you. So you just need to be set up right and understand your business and what applies to you.
I love it. So let's start with a product based business because typically product based businesses are more on the line for their sales tax. So let's talk about a product based business. What do they need to do to get started to make sure that they don't screw this up? Because I have been through a sales and use audit and it was not fun with one of my clients. Luckily, they didn't find very much, and it was just a small bill that was paid. However, it was not a fun process. So those people are not nice when they come and sit in your office, just to be clear. So, what are some safe steps that a product based business can take when they're just starting out to make sure that this doesn't come back to bite them?
Well, definitely. If you're a product based business, and let's just say you're in person, you have a physical location, or maybe you have an online product based business, definitely, if I would say, hey, let's take these steps, let's just see what the products are for one. Let's investigate or look into your county or your local state or your state Department of Revenue. So that way we know like what should you be collecting for these products and get that stuff set up. I'm a tech girl, so I always encourage people to, these POS systems, just set them up the right way. And just make sure that, your rates are the right way, that it's collecting the taxes for the products of the sales. And honestly, it's not too complicated. The only complication becomes if you are in a physical location with products and you decide, hey, I'm selling all over the United States. Now you just open up another chapter of the book.
No, yes, it is so much. Let me just be clear. If you are a product based business, it is so much easier to sell in your state that you are in. Once you go across lines, it gets to be hot mess express. So let's say that you have a boutique and then you decide, I want to create an online store. Now you have opened Pandora's box.
Right.
So give an explanation of what nexus means and how that now affects you.
Yeah, so Nexus is when you, like Pam just said, you open up Pandora's box. So I'm in Georgia, we'll use me, and let's just say I'm gonna be fabulous. I'm going to California, New York, I'm selling to customers all over, or they're actually finding my store and want to buy my products. I'm not gonna turn them away. But I do need to understand Nexus for each state because Nexus triggers depending on the sales volumes and the number of transactions that you actually have within that state. And each state has their own rules and playbooks that we have to play by, even if you're not there. So just need to understand that. And it matters because those states want some money because you sold a product to your customer in their state. And just because I'm in Georgia, they don't care. They want a piece of the pie. And so that's their way of getting that by Nexus. And like I said, you just have to know for each state what the volume is or what that sales number is or that product number is different. We can spend a whole day on that. So you may not have Nexus if you just had one product in one state and they'll be like, no, it doesn't matter. But if it's continuous or it reaches a certain level, then you will be required to file state taxes because Nexus applies to you.
Yeah. So what's crazy is you can have a boutique in Georgia, but then you start shipping to Kentucky. Kentucky has its own set of rules. So you ship 5 packages to Kentucky, you could either reach the nexus, which is the threshold for when you owe, or not based on those 10, based on the dollar amount of those. And so it's important to know if you are shipping across state lines, your product, you need to know the state that it's going to and what the nexus is in that state. And Alexis is right. There is software for this, y'all. Do not try to do this yourself, especially if you have an online e-commerce store. There's lots of good software. Alexis TaxJar, Avalara. There's ones as well, where you just it is do have to pay for it, but you attach it to your point of sale and it will let you know, congratulations, great job selling to Kentucky. You've now reached Nexus in Kentucky and you need to file your sales tax to Kentucky, even though you're in the great state of Georgia. Kentucky wants a piece of the pie for the products that you sold in there to people in their state.
Right. Yeah, the software does the work for you. You just have to make sure it's set up the right way and you have checks and balances.
So let's talk about what happens when people have a service-based business, because some service-based businesses in some states require you to charge sales tax and others don't. So give us some examples and some information there.
Yeah, and again, it's one of those situations like it just depends on the state, because each state has different rules and different ways they like to play the game. So for the most part, if you are a service-based business, in certain states, like if you do professional services, consulting, and things of that nature, you do not have to collect sales tax on it. But in other states, it's like you do need to collect sales tax, whatever the rate is for the services. And then it gets so complicated just depending on the type of service-based business. I deal with a lot of like, real estate people and things of that nature. And, they do fix and flips, or they may do like repair-based businesses and things of that nature. So it comes to a thing where, hey, me showing up to your house to say, hey, I can fix this for $50 or whatever my fee is, that is not applied to sales tax. However, if I take on a job and I'm providing the parts and, labor and different things to that nature, it can trigger a sales tax event where we have to pay sales taxes on certain things. So it truly gets very complicated. And this is where I see a lot of business owners either doing the wrong thing or doing, I wanna say the right thing, but it cost them because they didn't do it the right way. How about that?
Correct. Yes. And this is where it gets challenging because we've had clients that provided a service and a product to their clients. And the service part wasn't, they didn't have to charge sales tax for, but the products that they sold to the client they were a home remodeling. So they would do consulting and design work and then sell the client cabinets and shelves and furniture and whatever. And so they had to charge sales tax on what they sold the client, but not on their consulting fees. And so when we went in, they were actually owed a huge refund because Alexis and her team identified that you've been charging sales tax on all of this and you didn't need to be. And so we were able to get that client tens of thousands of dollars of refunds from the great state of Texas. But great state of Texas was not quick to write those checks, y'all. So while we were able to help the client, it was months before they got that money. So it's imperative to understand the business that you are in, where your clients reside, and whether or not your service or product, you need to charge sales tax. And what needs to be clear here is if you charge the client $100, sales tax is above that. And that rate depends on where you are or where you're selling to. So in North Carolina, sales tax is different based on the county. So that's confusing as well. And I'm sure other states are that confusing. So while if you have a product and you're selling it to one county, that's one rate. You go 2 counties over and it's another half a point or even 1 point higher. So this is not something to take lightly. This is something that you really do need to do your due diligence to figure out, here's the type of business that I have. Here's where my clients are. Do I need to start collecting? Because Alexis, share a little bit about how you see people screwing this up.
Yeah, well, for one, they screw it up because, they just don't understand fully the process and they leave it to their own, accounting skills, and that's where it gets messed up at. But definitely, I also see where the records aren't clean. Like the sales invoices are so like, I don't even know, they're not itemized and it's just a line item or an amount and it's not broken out. or the sales invoices are not like syncing into the books where it can be broken out the right way or captured for bookkeeping purposes. So that's where I see a lot of the issues come into. Another thing is like, hey, the returns aren't being filed if you don't use a system and you're like, oh, I didn't even know I need to file the return, or they don't have an understanding of the timeliness or frequency of when the returns are due, or don't know how to even file the return. So those are the issues that I typically see with clients and how they mess this stuff up for them. So if I can give you any word of encouragement, let's just start with the sales invoices. Let's just make sure everything is broken out, because even with those good of records, we can go in and fix the madness. But if the starting point is just a mess, it just makes everything else a nightmare for us to help you.
Yeah. So if you're like in the home renovation space, don't say $10,000 for a kitchen redo. Like, itemize out your labor, itemize out your design work, itemize out the products that you're putting in, because you don't depending on where you live, you might not need to charge sales tax for the full $10,000 for the kitchen redo. You might only need to be charging sales tax for part of it. And like Alexis said, when you overpay, the state is not eager to give you that money back. They want to hold on to it as long as possible. And the other thing that I've seen business owners do is they charge sales tax, but they aren't paying it. And so I've gone into clients and I look at their balance sheet and I'm like, okay, you've got a sales tax liability here of, tens of thousands of dollars. When is the last time that you paid sales tax? Oh, well, my bookkeeper used that, but I fired her 2 years ago. So now no one is. I'm like, okay, well, where's this money? Oh, we used it. We spent it. Okay, well, we're going to need to get you back on track with the state. Otherwise, they will come knocking.
Yeah. Yeah, I've seen that too, where a business owner just didn't know they collected it, but it's like, oh, I didn't know I need to do anything with it. I thought it was just our money extra. And I'm like, no,
Mm-mm. No.
no, no.
So when it comes to sales tax, what I hear you saying is making sure that you're itemizing out your invoices is step one, so that if your product versus service consulting is not taxed the same way, it's clear to know that. And the next thing is really to figure out, what rules do you need to play by based on what you do? So, Alexis, where do you recommend a business owner go to find out, do I need to charge sales tax? But what about this? And what about this? Where are some good resources to get them started?
Well, yeah, I definitely always go to the Department of Revenue in the state that you live in. So that's always my starting point. If you do use like a service or a tool like TaxStar or Avalora, they do have resources and guides for each state in their resource section. So that can be a place too. But I just like to go to the source. Uh, So I just always go to the Department of Revenue. Most of the Department of Revenue sites have a sales and use tax or a business section. And then I always research the code. I'm extra. I have to be extra to just see like, hey, this is what this business is doing. This is what we're selling. This is the services. And let me get a basis of what is taxable, what is not, what are the rates, and then I'm good to go when I have that research. And then if, like I said, if I'm going to use a tool like TaxJar or Avalora, a lot of times the rates and everything are automatically set up there, so you don't have to typically do all this research. But again, just like to check with the state first, and then also you want to look into your local county, because like Pam mentioned earlier, if you're selling in the state, they want their percentage. But if you're selling in this local county here, they want their percentage as well. And I see this a lot with clients who do a lot of vending. Like they have a physical location one place, but they're traveling all over the state of Georgia and vending here and doing all this stuff at trade shows. And it just gets a whole mess of a nightmare.
Yeah.
Uh, so definitely, that's what I advise, as a resource to figure out what do I need to do. Go to the state first.
Got you. And this is one of those things where if you have been charging sales tax in the past, you just need to draw a line in the sand and say, okay, now I know better. I'm going to do better and go forward and then just see what happens. Um, this is not something that you should, once you become aware that this is something that affects your business and how you operate, you just need to bite the bullet and start doing it. It's not something that you want to lay low on and be like, oh, well, I've charged sales tax in 6 years. What are they going to do? They will come and get you and shut you down. That's what they will do.
Yeah.
The state will come and shut you down. They will freeze accounts. They will lock the doors. There was a catering company actually 2 towns over from where I live, and they weren't charging sales tax. And it was big news because one day all the workers went to the warehouse to go make the meals for the events that they were hosting that day. And there was a big sign on the door from the state of North Carolina Department of Revenue saying, due to failure to pay sales tax, this
Yeah.
business has been shut down.
Yeah, it's serious. I've seen several cases, or people are, oh my God, I don't know what to do. I'm sorry. I know better, but I just, it's a nightmare. But definitely, if you know and you get one of those letters, you better get on the phone and call somebody and try to work something out. But like Pam mentioned, do better. You know better, do better.
Yeah. All right, so let's talk about use tax. So this is different than sales tax. Use tax is the money that you as a business owner owe when you buy an item out of state and are not charged. So in North Carolina, I live in North Carolina, we have sales tax. So if I buy something online for my business out of state and that state does not charge me sales tax, I am supposed to self-report, correct?
Correct. Yes. And then it also applies if you just buy something in state too, where a lot of times we'll get wholesale or we'll get an exemption certificates. That's a whole nother thing. You're exempt from paying sales tax because you're going to use those products or things to turn around and either sell to your clients. But there is a thing where you have to pay use tax on those items because you didn't pay the sales tax on them when you purchased them. So you just need to be careful of what that is as well and track those items also in your reporting so that way we know when we go file the reports that we're properly categorizing for use tax as well for certain things or businesses. So it's a whole nother.
Yeah. And that's where, as a business owner, if you sell online, you just need to be aware that the state that you live in might not charge a tax, but the state that you are shipping to will. So you just need to make sure that you're playing by the rules. For me, I try to buy most of my things from Amazon because they do. North Carolina fought a legal battle and won against Amazon so that sales tax is charged. So whenever I have things in a cart, if I ship it to, I have employees in other states. If I ship it to other states, it does not charge sales tax. But if I ship it to me for my business, it charges sales tax. So just be aware that if you live in a state that loves sales tax and you purchase things online and you do not have to pay it, don't be like, whew, that was amazing, just save some money. No, if you get audited by your state that loves sales tax, they will have you pull all of your receipts for online purchases, and any of those purchases that you did not get charged sales tax, guess what you owe? Use tax.
Yeah. And it's big. And the states that are really heavily involved, at one point in my life, I was a sales and use tax auditor.
Love it.
And I would have to go to these businesses and pull those financials, and our job was to find something to create a tax bill. So it's serious, and definitely for the states that don't have sales tax, like the Floridas, the Tennessee, the states to those, they really go hard. The Texas, they that because that's how they get extra revenue. Generated through these type of audits and businesses. So you need to be careful in any state you're in, but definitely for the states with, out the sales tax, they go hard, and this is how they make up the extra revenue. So just be careful.
Yeah, this is one of those things where it's worth just going on a 30-minute deep dive online, asking AI, I live here, this is what I do. Is this that pertains to me? Because again, this is something that states go hard on to try to get money. We have had we have a lot of clients in Texas, and we help them with their sales tax. And we've had a lot of um, hours on the phone with the Texas comptrollers arguing over our reportings and helping our clients stay compliant, but also not pay. And these states are not nice about it. They want their money.
They do. They really do, and I mean, that's how they stay afloat.
So, as a business owner with my CFO hat on, one thing that I often recommend is we've talked about profit first on other podcasts, but having a separate checking account for sales tax. Because if you charge sales tax to your client and it comes in with from Stripe in your regular deposit, you're like, woohoo, got a 10 grand deposit today. Like, friend, couple $100 of that ain't your money. That is other people's money. And so you need to put it in your other people's money checking account, or if you want to call it your sales tax account. But I highly recommend you partition this off and make sure that your bookkeeping team is understanding that you're charging sales tax and is parceling that out. So you don't think, woohoo, I had a 10 grand day. No, actually, you had a $9,000 and change day. And the rest of it goes to Florida, Arkansas, Kentucky, and Tennessee, because that's where you shipped your products to. So
Right.
be aware that that money just doesn't, if you put it into the general bank account, it will magically disappear with payroll and your credit card bills and your softwares. So having a separate checking account to hold this money is key, because when it's time to write that, I have a client that's in the med spa space and he just had it all going to one account. Well, when it was time for him to pay his taxes, sales tax, he owed over $4,000. And he's like, but Pam, I don't have it. I was like, Tennessee does, or it wasn't Tennessee. I think it was somewhere out in the Midwest, Iowa, Illinois, somewhere. They don't care that you don't have the $4,000. Like, you need to get that money together to be able to issue that payment to the state. And so having a separate checking account helps you realize that money ain't your money. That is the state's money.
Definitely. Yeah, I agree with that. I wholeheartedly, agree. Separate account for sales tax because it's different than estimated taxes, it's different than payroll taxes, all the taxes we deal with. So keep it separate.
Yeah. So entrepreneurship is not for the faint of heart. There's lots of ways that our government would like a piece of the pie. So you just need to be aware of which taxes you need to be handling, because we've talked about payroll taxes on other podcasts. We've talked about tax returns. Well, this is another one. Sales tax and use tax are just making the list longer of money that's coming out of your pocket and your bank account to be the wonderful thing called an entrepreneur.
Right.
Alexis, is there any other piece of advice that we can wrap up with today to help our entrepreneurs?
Yeah, definitely. One thing that always pops into my mind is the $0 followers. I call them $0 followers. But what that is a lot of times when we are entrepreneurs, we set our business up, we get super excited. We're told to get all this stuff, set up a sales and use tax account, get this one with the local authorities. And oftentimes, I see clients where they will set up a sales and use tax account, but they don't have any sales going consistently or none at all. And if you do that, you are responsible for filing those reports when they tell you they need to be filed. And if you don't, I have seen clients have thousands of dollars of tax bills and they're like, I don't even have a sales and use tax. Well, you didn't file the report and they penalize you for each month that you did not file. So one of the things I always encourage clients is turn the account off. It's so easy to set up a sales and use tax account if you decide I am going to start selling products versus it just sitting there. You're not doing it. You're going to forget to file, or you're paying an accountant to file a $0 report and you don't need to. So just turn it off. And then that way you're avoiding any potential penalties and nasty gram letters and all this extra stuff. So that's just one thing I wanted to add.
No, that's brilliant, because you might be eager and go out and set it up, but then find out down the road that what you do, you don't need to charge sales tax for. But the state doesn't care. You better file 0 monthly, quarterly, annually, whatever your requirement is, or they will penalize you for not filing. So you would still end up owing just because you didn't file. So that's a great point. So if you set up this account, found out later that it's not relevant for you, close the account, let them know that you won't be filing, because otherwise you've got to file that voucher, in North Carolina, it's little vouchers every month or quarter annually that says 0, or they will come and come and charge you, even though you didn't know anything.
Right. Right. So, yeah, be diligent.
I love it. So, look, entrepreneurs, this is not a podcast to make you feel overwhelmed or stressed, but it's help you to be aware that this might be something that's relevant for you and your business. And it might be more complicated than you think. So it's worth taking a time to learn about and do your own due diligence for your business based on what you do, who you sell to, where you live, to determine how this pertains to you. But key points are: make sure that you build invoicing, make sure you have current bookkeeping to know where your money is. And then if you are required to do file sales tax, having a third-party software to help monitoring it is a huge advantage. And opening up that separate account to hold that money will save you stress when it's time for them to zap the money out of the account. It means that you can still make payroll and keep the state of Texas happy that you've filed on time. So those are some actionable steps for you. Alexis, thank you so much for sharing your brilliance. I learned so much from these conversations as well. Look, entrepreneurs, if you're out there and you're like, books? What? Tax? What? A budget? Nah, that's a dirty word. Look, Pivot Business Group is here to help you. We work with entrepreneurs and businesses typically doing 1 to 5 million in top line revenue. We would love to support you. Just go to pamjordan.com, hit the schedule a call. You'll meet with Alexis. Has a team of tax gurus. We've got bookkeepers. We got fractional CFOs. We are here to support you. Also, don't forget to like and subscribe on YouTube, podcast, Spotify, or wherever you listen. And remember, it's not about what you make, it's about what you keep. We'll see you next time. Thanks, Alexis.